I'll be your MC moderator for today. I am Kojo Agoto Boateng. Until recently, I was a voice on radio and TV at City. But now I'm a farmer. I spend 4 days of my week in the beach and 1 day in the city, usually Wednesdays. And we are into maize, soya, poultry, rice. We are trying to distribute our AVV rice on the market, but the rains won't allow us. Flooding and bad roads. So we are trying, but we love what we do. New Age Agric Solutions and WeCom, and we are happy to be here. Since I'm here, I'll speak for myself and my team. So New Age, we are into input distribution and large-scale farming. WeCom, we have a crowdfunding platform which we used to raise money to do 1,000 acres of maize this year. We did soya and rice as well. And on a personal level, I'm launching a project called the Dawa Integrated Farming Village in January. In Dawa, it's an 800-acre integrated farm, which I believe a lot of us can tap in as we go along. We'll begin with the first address by a board member of Impact Investment Ghana and a partner at Injaro Investments. For those of you in this space, I think she needs no introduction. Mirabel Moro, please, let's welcome her to give us the first address.
Good morning, distinguished guests, all protocols observed. It's great to be back on the impact investing stage. There are lots of you here that I know quite well. I've worked with over the past decade, some about 3 years, so it's good to be back. I bring you warm greetings from the board of Impact Investing Ghana. We're the premier organization working on impact investing here in Ghana. Indeed, you've chosen a fantastic way to spend your morning today. It's quite hot outside, and I think IIGH has brought us here for a treat. Secretariat has been hard at work with a broad research team to really bring this report to us. Today of all days, really, we don't need anyone to tell us how hard things are. Why the Russian-Ukraine war is making food prices, are making food prices so much higher. Why it's taking a whole lot more to put fuel in your car. I just fueled up yesterday and I was quite surprised where we got to at the end. And right now we all know, I hope that if you have any extra CDs, you're not leaving it in your bank account. You're using it to buy up whatever groceries you need at home or business supplies, because it's not worth holding on to our CDs for too long. More importantly, why as individuals and our families and businesses and the collective buying power and buying decisions we're making right now are more important, more so now than ever before. What we really need today is, what are we going to do to start digging ourselves out of this rut? I just got a notice that the president is going to address us on Sunday, and I hope we're able to also wrap our minds around various initiatives at the government level that will be put in place to help us. So, ladies and gentlemen, my job is very simple. Put your thinking caps on, take out your note-taking devices. Let's actively listen to what is going to come out in the report and reflect on it, and more importantly, identify what's the key next steps for us within our individuals, our SMEs, our investing vehicles are going to be to really take us out of our current rut into a broader catalytic investment space. So welcome, and I hope you have a very productive discussion with everyone. Thank you.
Thank you very much, Mirabel. So fellow Ghanaians, at this point, we're also going to hear from one man who has inspired many. For me, I read his posts I follow his journey, and it inspires me to do more for my generation. He's an excellent, impactful young man. Member of the board of Ashesi University, an entrepreneur who has done so many across the world. He's also going to give us an address. Fellow Ghanaians, please help me welcome Sanku Dele.
Thank you for the much too kind introduction. Check your momo. It's great to be here. It's great to represent Ashesi University. And it's wonderful for Ashesi to be a part of this. At Ashesi, our mission is to educate ethical entrepreneurial leaders in Africa. And this is something we take very seriously. And this is something that anyone who has interacted with any of our students or alumni will be able to testify. They really prove what we do at Ashesi, which is a transformative journey in turning these students into ethical entrepreneurial leaders. We've been involved. We have so many programs from our venture incubator to the Ghana Climate Innovation Center to others that we put in place to help create this entrepreneurial ecosystem. And we do this also through teaching and research and through collaboration. And this is a clear example of that. Why is this very important, this topic of SMEs? Because SMEs are responsible for 90% of business enterprises in Ghana. 90%. 80% of total employment. 60% of GDP, according to some estimates. And when you contextualize this in the fact that across the continent, every year we have 11 million young people joining the labor force to only meet 3 million jobs, it underscores the importance of us really ensuring that we can have these SMEs continue to be the engine of growth. There was a slide earlier I saw that had something about the financing gap. And I chuckled at the earlier comments alluding to the economy. Because part of the problem of that financing gap is the financing is being swallowed by a government that's on a reckless borrowing spree, which crowds out capital for the private sector. So we need our governments to borrow less, and we need the banks to provide more capital to SMEs. And we clearly need catalytic capital, which we're going to learn more about. Especially because a statistic I read in the last UNCTAD report said that 80% of trade takes place in value chains linked to multinational and transnational corporations. 80%. And that is a $20 trillion trade. So there's so much that SMEs are missing out on, yet SMEs continue to be the engine of growth and continue to be the engine of employment in our country and across the continent. So thank you all for coming here. Ashesi is very proud to be a part of this, and I hope you all stay engaged and contribute to a wonderful event. Thank you.
Thank you very much, Sangu. Over the years, PEF has been a key leader in reforms in the business sector, private enterprises sector, and our economy. And we have the CEO of PEF, who is also a member of the Research Steering Committee. Please help me welcome Nana Osei-Bonsu to give us an address. Give us a 1983 applause for him.
I didn't know you were going to call me, but I was just saying to Charles that they're mentioning him and they're going to tell his age, you know. So not knowing it, you meant it for me. Thank you. It's good to be here. This whole entire process baffles me. Why? Because we keep talking about access to funding gaps and all. Why do we say that? We don't even know if it's available. I would rather say availability of funding. Then you analyze the gaps or, whichever ways it goes. And then we have access. You can't have access to something you don't have. There's no access when there are funding gaps. There's no access when the funding don't exist. So let's tailor our language to exactly what we mean. And we talk about catalytic investments, catalytic capital. What is it? Does it depend on the objective of the investor? Does it depend on the objective of the destination of the funding? Every investment has a catalytic effect. Every investment, regardless of what you think or what you don't think. What does it do? Every investment triggers action by different parties, either by your associates or somebody who is looking for opportunity happens to chance on what you have done and be able to look at that and also take action to. Every investment, no exception, triggers action or counterpart action on different people. So when we're talking about catalytic investment, when we're talking about investment destination, we have to be sure that do we know the mindset or the objective of the investor? Because it makes a big difference. But we are here to listen to the report and to dissect it to make sure that it's meaningful to trigger tomorrow's investment discussion. Because all that we do now is setting the stage for tomorrow's, the rules of engagement, the capital mobilization, the triggers that we look into influence our economic development. So I wouldn't say much until we delve into the discussion, and then we will do what we need to do. Good morning and thank you.
Thank you very much, Nana. So now we shall hear from the UN Resident Coordinator. Please help me welcome Charles Abani with a round of applause.
Thank you, Uncle Kojo. I say that because age is up here. So if you're feeling it, dude, come, let's talk. We'll help you. We'll help you join our generation again. And thank you. I'm so pleased that there are no protocols in the room. So let me also say all protocols duly observed. And it's great to see you here, Nana. Nana is also on the steering committee of the UN's most recent cooperation framework, which we hope to sign imminently. As is the case with the UN, of course, I have 10 pages to read to you, but I won't. I won't. I'll just follow the spirit of really the conversation that's going on here. The bottom line is we've supported lots of work around between 2020 and 2022 around really how Ghana achieves the Sustainable Development Goals. And clearly financing is a key element to that. And making sure that whether it's a gap you're filling, whether it's access, that this comes through. And certainly we know that for Ghana to achieve its own ambition of self-reliance and also achieve the SDGs, unless businesses grow, nothing is really going to happen. And that 70% of that space is occupied by MSMEs, and probably 70% of that 70% is women-focused businesses. And therefore, that begins to tell us where some of our future investments need to be going in terms of where we go. So this is really an exciting and an important event, and the UN traditionally is very government-focused. One of the things we have said is that we need to expand that horizon to civil society and the private sector to work constructively with these sectors to, I guess, use the brand leverage of the UN to see what we can do to help in the space. And I think there are a number of things that Impact Invest in Ghana has been involved in that we're also connected to. And so for us, it's a really important gesture to actually be here and recognize that on some of these issues, the best thing we do is actually to help connect people, not have the skills or the competencies in the space, and that many of you actually have those skills in space. So certainly in our new generation cooperation framework, our attitude and approach is to really work more in partnership with private sector institutions around these things, to see how we use our brand to leverage in significant additional resources to address what I call the twin bottlenecks. On the one hand, where is the money? But on the other hand, where does the money go? Because money has its own logic. And so how do we ensure that we're playing the best around money's logic? And so I will only just end on 2 points. And I'm sure Peter will really hate me. He spent all night writing this, but I'm not going to read a word from it because a lot of these statistics are well known to you. Just to say 2 things for Africa, for this continent, moving forward. One, we have to learn lessons, right? And so we can't keep talking about the lessons of COVID and more recently the ironic lessons of the Russia-Ukraine war. We cannot be a starving continent because someone somewhere else is at war. And so we must turn all of that so-called doom and gloom into opportunity. And I think both the age demographic that we're in, sorry Kojo, you've passed it, and basically this sector is the space to actually leverage that. And so let's make sure we're learning those lessons and actually doing business properly. And I also say this not just in terms of businesses, but digital. We stand the chance, and this is UN speak, of being left behind again. And in the digital transformation that's going on, how we promote and ensure that actually African, Ghanaian businesses and intellect is driving content, is driving ownership, so that we're not just, again, if you like, the end product of people with long straws sucking out from the continent in new and different ways. And really, in another generation, people will be talking about that. And the second thing is ownership. Really, how are we owning these businesses? And so what kinds of investments are good investments for the continent, and what kinds of investments are not good investments for the continent? At the global level, we talk significantly and seriously from the Secretary General's level about the need to reform the global financial architecture that operates. It doesn't operate in the interest of least developed countries, particularly those on the African continent. And so let's be mindful as we go into this, that we're not excited and running headforth first into a system that reinforces and locks people into poverty, but that we're using the opportunity of the crises, multiple crises and shocks that we face, to re-engineer that system so that it works better for us and helps us to gradually balance up the level playing field. So those would be my 2 pieces of advocacy. And of course, to thank you for all the work that you guys are doing, Amma, and to say that we stand ready to collaborate with different organizations, from businesses themselves right through to ecosystem actors like yourselves, over the next 3 to 5 years to see what we can contribute as well. Thank you very much.
Thank you very much, Charles. Fellow Ghanaians, at this point we get to hear from the woman who summoned us here. At this point, we are going to have an overview of the research report findings, and Amma is going to do that. Please help me welcome Amma.
Thank you, Kojo, and thank you to everyone who welcomed us and set the stage for this report. Before I jump into it, I'd like to say a big thank you to the team behind the report. I'm the one who gets to stand behind the podium and present it, but there's been a lot of hard work over many, many months to bring it together. So I'd like to acknowledge in the room Gordon, Senna, Imelda from Ashesi University, Franklin, and our steering, Hamdia and Nana Bonsu, as well as William and Mary and the rest of the Impact Investing Ghana. If you're in the room, if you can give us a wave, and people, give them a round of applause. And Senna, you're one of the ones waving, not clapping. Thank you, thank you, thank you. Lots of debate about whose data is catalytic and whose isn't, and how to classify things, and lots of reflections from our steering on so what. And we hope that what we've put together will get you thinking and help you to do something differently, maybe collaborate with someone else in the room in a new way. So The goal of the study was to provide insights to enable us mobilize catalytic capital for SMEs, especially appropriate capital, capital that's good for them, and capital that leads to impact, jobs, productivity, basic services, etc. It's important in a conversation about catalytic capital to be clear what it is. And we took our definition from a consulting report by Tideline, which said catalytic capital is capital that accepts disproportionate risk or concessionary return because it's looking to generate impact or enable third-party investment that would otherwise not be possible. So it's not just about financial return, which is something you have in every investment, but it's about doing more. It's about being the innovative first starter who will invest where there's an opportunity where others won't, and doing it in a way that expands the pie for everyone. It's a fun place to be, but it's also a risky place to be, which is why there's disproportionate risk. So let's sit with this definition for a while, the different elements of it, being willing to take on risk, having a focus on impact, and making space to make the pie bigger for others to be able to finance. Now, catalytic capital typically has 5 forms, and we took this out of work done by the Catalytic Capital Consortium. The forms it takes is the concessions. What am I doing differently from conventional capital that makes me catalytic? And there are 5 things. Usually it's about price. You enter a space and you are willing to accept a return of investment lower than the risk because you see an opportunity that you want to unlock. Some concessions involved making a pledge, using a guarantee or some other feature to enhance the credit of an investment opportunity, whether it's an institution or a vehicle or an individual SME. The third is position, which is you are investing in something, but you're willing to take a position of risk so that others who are more risk averse will come in and there'll be more funding. So, for example, having a first loss position. So if there's a return, you get to participate in the return. But if there's a loss, you say, I will guarantee that you'll at least get your money back. And that can be one way of attracting others. The 4th P is patience, which is investing in things that take a little longer than usual. And because good things, like transforming SMEs in Ghana, can take a little longer than usual. And sometimes we're not even sure how long it's going to take. And so patience is about having the space for that. And then finally, purpose. And this is really about innovating. It's about understanding what you're trying to accomplish and for whom, and tailoring the investment, whether it's an institution or vehicle you're designing, or it's an individual investment, to meet the needs of investees. So we saw a lot of innovations in the research data that different categories of institutions were using to meet the needs of the SMEs they were trying to serve. So keep this in mind. It will come up again and again throughout. Think about what are the people that we're going to talk about doing that is enabling financing for SMEs. Which of these concessions are they using and why? And the question is, which of them is working and which ones aren't working as well? So these are the things, the concessions that will make either an investment vehicle like a fund or an individual investment catalytic. But what is the capital going to do? And what it does is not different from what capital does. It's seeding new initiatives. But if you want to take a risk and have impact, then you want to seed things like new models. Things that enable us, for example, to deliver financing to SMEs at a cost that they can afford, at a size that they actually need. That's innovative. That is impact worth investing in. Things that have not yet demonstrated commercial viability and track record, but have good promise. Or scaling, we know this, expanding something that works into new situations. Sustaining, and this is an interesting one, because there are some things that are so essential for an economy, some things that may be essential for a value chain that need to be there, that may require subsidy or something on an ongoing basis because of its impact on unlocking financing for SMEs or making that value chain work well. And then rejuvenating, which is about helping things that have worked well to get a new burst of growth, or reinvesting in something that may have had some decline but still has a lot of promise. Now you'll notice two activities that we say enhance the effectiveness of catalytic funding, but is not catalytic funding itself, which is ecosystem building, facilitation of transactions, capacity building. When we talk about catalytic capital, we're talking about investments. It's the cash. We want to see cash moving into businesses and helping them grow. Now, this research was looking at catalytic funding for SMEs. So it's important to understand in the context of Ghana, what does this mean? And from the Ghana Statistical Service and also reflected in our MSME policy, we have a definition. We focused on small and medium-sized enterprises, small enterprises employing 6 to 29 workers, or with $100,000 or less dollars in fixed assets, and medium from 30 to 99, and with fixed assets between $100,000 and $3 million. This has come up in the intro remarks quite strongly. We don't have enough financing for SMEs. SMEs are also crucial for impact. So I'll skip and tell you a little bit about our research journey. It was a mixture of working with the steering, a Delphi of experts, doing desk research. We interviewed 24 investors and 25 investees. We had a survey of 150 investors and 200 investees. And then there was a process of data analysis and validation with a team of experts and a number of workshops. And here we are presenting the results. If you go into the report, it will tell you all the good things we did to make sure there weren't errors, and the fact that there are limits to our methodology. So I'll skip that and jump straight into the findings. So catalytic funding for SMEs in Ghana is deployed in 3 ways. Sometimes you have a catalytic funder investing directly into SMEs. Sometimes you have a catalytic funder investing through a commercial institution like a bank to create a catalytic product. So the institution is a regular institution, but they have a product that's catalytic. And sometimes you have a catalytic funder investing in a vehicle that is 100% catalytic, like the Venture Capital Trust Fund. Its whole mission is around catalyzing, and they invest in SMEs. To get to the meat of the issue, we identified, this was a longitudinal study looking at SME financing schemes between 2004 and 2021. And Nana Bonsu was just sharing that 2004 is the year he came back to Ghana. So after a long period of being away, so it's really exciting that this is the story of your journey with Ghana. We found 72 SME financing schemes. They were valued at 1.73 billion. And these schemes were a mixture of financing and other stuff, like the ecosystem building training. And in the 1.7 billion, 1.16 billion was capital invested in SMEs. And out of that, 949 million was catalytic. It was willing to take on risk. It had clear impact goals. And one of the things we found out is schemes are not very good at tracking how they achieve their outcomes, especially if they actually unlock additional funding. So only 10 of these schemes had verifiable data on the third-party funding they had enabled. Some had data, but we couldn't verify. They couldn't give us stronger verification that we could include. And for those 10 schemes, they could show 552 million in additional funding. This is 5 times the total value of those schemes. So you can see immediately that purposeful design led to additional income. It was interesting to see, though, that 74% 60% of the additional funding was unlocked by schemes that made capital investments. So capacity building alone didn't seem to be as effective as capacity building combined with catalytic capital investments, or the investments by themselves. And that was an interesting point. So who's in this family of catalytic investors? The private sector was the main investor, and we classified investor because these were schemes designed by private sector entities. Sometimes they sought funding from others, but to avoid double counting, we looked at who designed the initiative, and so sometimes if they got a loan, they were still responsible for the loan, and so we classified it according to the entity. So if the government of Ghana got a loan from the World Bank, that was a government of Ghana program. And so you see private sector at the top, and then DFIs, government, international development agencies, and foundations. And this gives you a sense of who's a small part of the pie and can be increased. It's good to say that for foundations, a lot of the foundations were funding programs designed by others, and so in consultation with them, we classified those programs according to who had designed them, raised the money for them, was responsible for them. And so the foundation bucket is a little bigger than what you see because they are sort of a source. But it was very hard. There's a lot of double count. There's a lot of money flowing back and forth through many entities. And so we needed to adjust for that. Funding grew 5 times over the period. If you look at the fares between 2004 and 2009, and then getting to 2021, it was a 5-fold increase, and it was pretty steady over the period. But we needed to understand more. And so we tried to identify individual investment deals where we could get access to data so we could understand more. And we identified 113 investment deals valued at 438 million. The average deal size was 2 million. And development finance institutions had a higher average, 8 million. And there were investments by fund managers that were a little lower, 1.5 million. So this may be driven by who has deal data in a shareable form, but these were the deals that we could identify. It could be that some of the smaller deals are harder to disaggregate. So the question is, what concessions are these catalytic investors willing to take? And most of them took 2 concessions or more. The average was 2, and at the top was purpose. Purpose and patience were at the top. And usually they were responding to short investment tenors. The commercial investment tenors were pretty short, and to specific needs of SMEs. For example, the need to have a smaller investment size or the lack of collateral. So they would design something into the instrument to enable an SME to access it without collateral. Or they would go with a smaller investment size than a commercial investor would look at. And you can see that position, that is guarantees, about 18% were doing that. And price, or having a lower price, was only 8% of investors were willing to take a return lower than the market rates. In a market where our rates are above normal, that was interesting to see. And the few that did, the 8%, their targets were pretty close to the market rates. They were not many were significantly lower. There were few, and the report has quite a few case studies that describe some of these. No one was helping revamp declining SMEs. So, is all this catalyzing leading to anything good, is the question. And the majority of investors, 85%, and investees, felt that catalytic investments yielded significant positive outcomes. And we saw that each dollar mobilized at least 3 to 7 third-party investments in SMEs. And this came from the cases. So when we had access to cases, we were able to do a deep analysis around how much had been mobilized. And you'll see some of the the case analysis of the data. So here's investee company, and here is their revenue before and after the investment. And so we saw that there was increased revenue by at least 25% or more. That was the average. Increased employment, 60%. Unlocking third-party investments, we've already said it was 3 to 7 times. And increasing access to financing. There were many, many cases where before the catalytic financing, the SME had not been able to access any financing, and being part of this catalytic product then enabled them to go on to unlock. The question is why? What were the catalytic investors doing to make these good outcomes happen? And we saw 4 broad themes. Longer investment tenors was a big one. It's a simple one, but it made a big difference for a lot of SMEs because they could focus on growth in their targets, in their buying choices, etc. The second was using innovative financial products, innovative in our market, like convertibles. So in the midst of COVID, a lot of debt was converted to equity, and many of the investees said, that's how come we survived. And they were very reluctant to have equity until COVID, and so it was interesting to see how that shifted in the minds of investee companies. Investment sizes that aligned better with the needs of SMEs was also one of the big concessions. And it costs more. And you take a hit when you do smaller investment sizes. And so those who did were very deliberate about it. And then funding at concessionary rates. This was mostly for early stage businesses or enterprises located in or led by members of underserved populations or regions. So these are the things that we saw run across the cases we analyzed, where you could see a very dramatic before and after change. But it's not all about smelling the roses. About 36% of investors perceived that there were negative unintended consequences. Apologies, the text is covered. And these were mainly things like market rate distortions and promotion of careless investments by investee companies, and sometimes just poor due diligence by financial intermediaries, and undermining sort of the culture of doing business as usual. Though there were many who also said that you cannot talk about market failure in a market that doesn't exist. Since there's no funding going to these populations, then where does the question of market failure come? What we did with the cases was to tease out the strategies that various cases were using to avoid negative outcomes. It was very hard to get anyone to give you data showing that they had a negative outcome, but we were able to tease that out of the cases. So some of the things we saw was very deliberate targeting. So trying to target underserved markets that are actually excluded from commercial financing, to avoid distorting existing well-funded sectors. And that can be hard, especially when you stand a chance to make a good return by putting money that you have declared to be catalytic into places where you are guaranteed a return. And so it took a certain level of discipline to be clear with deciding who to work with. Blended finance seemed to work, and that's where collaboration comes. Taking some of the do-gooders money and mixing it up with the commercial money tended to avoid negative outcomes. And so a lot of the cases that we analyzed were very intentional about blending. There were even times when you wanted to mask the fact that there was a catalytic source to avoid some of these negative behaviors. De-risking investments instead of a concessionary rate also was something that we saw in some of the cases. Deliberately connecting SMEs to commercial funding, so weaning them off, not expecting that they would naturally wean off, but having a strategy of weaning them off by pushing them to get commercial investing, maybe first for working capital and then building experience and growing, was done by some of the investors that we analyzed. And then this was a really interesting one, being accountable and transparent with stakeholders, including your board, your shareholders, and even publicly, helped to avoid negative outcomes. And finally, learning and adapting. Those that were deliberate and had good results, when things weren't working, they admitted it. They didn't continue running programs that were not achieving outcomes because they had said they would run them that way. And this means that providers of catalytic capital, especially people like international development agencies who have programs that tend to be more fixed in their design, need to think about how they can enable learning and adaptation in SME financing. Because without that, you can't really succeed. And if you go into the report, you'll find many others. So we try to tease out 6 broad recommendations. Each of these sort of has layers about it. But we try to look at a high level, what should people do based on all this? And the first thing is taking action to increase the volume of catalytic capital that works and the number of intermediaries willing to work with it. There were many financial intermediaries that were not willing to work with catalytic capital and felt that it was distorting. And there were catalytic initiatives that had struggled to find good places to partner with and to deploy money in a way that didn't distort the market. And we have suggested actions for various categories. For example, international development agencies consider blended finance. We had some interesting pay for results cases that were interesting, things that enable you to move a little beyond ecosystem building into actually moving cash. Especially because foreign exchange was the biggest risk across board. Everybody said that a lot of the catalytic investors were foreign, and exchange risk was one of the major barriers that prevented them from really accessing a catalytic vehicle. And being able to support innovative vehicles like funds of funds. There are 2 fund of funds currently being structured in Ghana. And these are interesting vehicles that can build flexibility into them, that can work on unlocking local funding. Emerging fund managers was also another opportunity identified. So the bottom line is this: design products and vehicles that are more likely to lead to positive outcomes and that are more likely to unlock third-party investments using some of the lessons from the report and to reduce the risk of negative outcomes. You can check out the report for more. So we asked those who didn't do catalytic investments, why not? And some of them said, there isn't a demand and supply mismatch. I can't find any catalytic suppliers to help me create this product, and I don't think I will find enough SMEs to invest in. And the supply of SMEs was also concentrated in Accra. We did some geographic analysis. And Accra is not necessarily the poorest region in Ghana, the greater Accra region. Some of it was fear of adverse consequences, the high cost of transaction and limited compensation and limited insights, examples. We're hoping this report provides some examples that can be beneficial to people designing it. The gaps that were identified, I mentioned the currency depreciation. There's a lot of funding going through VCPE that focused on high growth. This was mostly coming through DFIs, going into the larger end of the medium businesses. Current guarantee schemes were undersubscribed. That was interesting to note. And it was interesting to ask, why are guarantee schemes undersubscribed? Some of the people we spoke to said the guarantee cover is not enough. Others said it costs too much. And others were just not aware there was a guarantee available. And so it's in designing these interventions, there also needs to be a very big push to get them used. The Ghana Alternative Exchange was another sort of opportunity that few people had used. So I'm going to end here because we want you to read the report, and we want to be able to have a good discussion about some of these initial findings. The whole idea was to whet your appetite. It has a summary that can give you a good overview of what's happened and throughout the report, and then you have the full report that's more like a good reference. And in addition, we have an interactive map, because sometimes you just want data. You just want to see who else is in your space. And so that map is still in development, but we will be able to share with you where it is now, when you can go up to its website and sign up so you're notified when the data all goes live. And it's been a great, great pleasure to work with the team on this report and to bring you these results. I hope that some of you will leave here thinking, what can I do differently to profitably invest in SMEs in a way that unlocks more funding? Thank you.
Thank you very much, Amma. Please, another round of applause for her. So now we've been given a summary, right, of what is in the report. It's a good time to have a conversation about what to do, expectations, and how to get better. And at this point, I'd like to invite my panelists. We are just going to spend about 20 minutes to talk about our problems and our solutions. And Hamdia Ismaila is the General Manager of Venture Capital Trust Fund. Please help me welcome her with a round of applause. Hamdia, please take this seat. Sheila Elom Eni is the CEO of We Soy Company Limited. Please help me welcome her as well. We also have Dr. Loretta Sapong, head of the Women's Desk Ecobank Ghana Limited. Please help me welcome her as well. Loretta, move to the next one for me. You have microphones there, yes. And then Mr. Samuel Yeboah, CEO of Meripa Capital. Samuel? Yes. Thank you. So we are going to have a quick discussion. I want to start with you, Hamdia. Amma has presented the findings. You have worked extensively in this particular space. So how do you think we can drive more catalytic capital investments to support SME growth in the country?
Thank you. I think let me just talk about what I do. We actually started as a catalytic investor, and that's what we do. And we invest in funds. We invest in pool funds because that's where we think that we can leverage. So I work for Venture Capital Trust Fund, and so far our leverage is about 1 to 4. And when you compare us with our peers, we're actually doing well. So what we need to do is to have more vehicles, right, where we can leverage more funding so that when we blend it, we are able to have people taking first loss. Venture Capital Trust Fund usually will take a first loss position. And sometimes when we talk about first loss, people think like, oh, really? We really haven't lost money. It's just for somebody to hear that there's a first loss, there's a layer in this funding structure where there is somebody who will take the losses when they happen. I think what we don't have in the market currently is hedging. And most of the monies coming in are forex. And so if we can also have another hedging facility to help, we can unlock more funding for the market. Yeah.
Thank you very much. I'll come to Loretta. So a lot of SMEs, and majority of these are women-led or women-founded. And if you look at the reports, these businesses don't get the funding. It is those led by us that get the funding. You head a women's desk. How do you think we can target these women-led businesses and give them the support they need to scale?
Thank you very much. And indeed, rightly said, women form majority of the SME sector. And if we are to embark on education, let our women entrepreneurs, women-focused, women-owned businesses know that these funds are available if we are able to also change mindset to say that, yes, we want to grow our businesses, but we need support. Because most of the time, these women-owned, women-focused businesses, we want to do it ourselves. I have done it like this. We need to change that mindset to embrace change and to have the appetite to grow our businesses. And if this education and awareness creation are available, then we'll be able to help our women-owned, women-focused businesses to grow.
Let me come to you, Sheila. We've been on a lot of platforms. Your story has been told far and wide about how you got here. What do you think you did right to position you for funding, for growth, and for the impact that you are making? And how can all other businesses tap into that?
Okay, I'll say that. So I started by doing the right thing at the first time. So getting my governance system in place, asking questions, seeking for help. And when I started, I thought I could do everything on my own. But during the journey, I realized that no, I need to bring partners on board. Most of SM, because of lack of trust, we are unable to bring people that have the resources to help us scale up. And so to have that open mind, to bring people that have the skills, that have the resources to help us scale up our business. So bringing partners on board and then trying to put the structures in place, seeking for help, coming to joining Impact Investing Ghana, telling them this is how much help I need, and they connecting me to the right people. And that has gotten us so far.
Let me come to you, Mr. Eboa. So early this year, we raised funds. We did maize, we did soy, we did rice. I said, oh, let's get a loan and build ourselves a rice mill. And then we did that, 1.5 ton per hour. I think it cost us $70,000 to buy the equipment. And then we produced so much rice, we said, oh, let's get money to buy another mill. Same $70,000, we can't afford it because our CD is epileptic. Now, there are a lot of SMEs and businesses that I've dealt with. They are afraid to even go for funding because now you get the money and 2 days later it's all gone. There are institutions that are also willing to fund businesses and play their role, but the general ecosystem doesn't make a lot of things make sense. In fact, somebody once told me that the Ghanaian business environment has a mind of its own. No formula, no parameter, nothing works within this particular space. So from where you are, what is really needed in the ecosystem to enable businesses, to enable the whole environment, to access catalytic capital, to make these available, and to make things make sense in our economy?
Okay. Is this working?
Yeah.
Can you hear me?
Yeah.
So thank you very much for that question. Now the case study, I'll call it a case study you present is typical of most entrepreneurs, the challenges that most entrepreneurs face now. Now ideally for Ghana, you would want to have CD denominated vehicles for our businesses, because tying their necks with dollar investments, as you said, creates a scenario where they are unable to service those, if it's a loan, to service those loans, or even if it's equity, right, may struggle to exit those transactions. What I always say is that for early stage businesses, debt typically is not the right investment. Some form of more patient capital, so equity, some form of quasi-equity, or even if you did some royalties base that was structured in a way that gives you patience to use the capital to a point where the business can deliver the desired outcome is preferable. Now, your question is, what do we do for the current environment that we find ourselves in? I say there's a two-pronged approach. I talked earlier about, as much as possible, trying to find CD-denominated vehicles, whether it's debt or equity for our businesses. However, in the very short term where we find ourselves now, it is critical that we have catalytic capital to blend even the city-denominated commercial capital that we have, right, to blend it, because at this point, things are so erratic until the dust settles. If we don't blend capital, we're going to put businesses in a very, very precarious situation. So that's what
Now, I'll come to you, Loretta. You work with a commercial bank, EcoBank, just like MTN. Everywhere you go, you find EcoBank. So it's expected that you have roots in the economy to support growth. What are some of the things that commercial banks are doing now that the market must know? And what are some of the opportunities for the market to work with commercial banks to make it possible for people to access catalytic capital?
Thank you again. And starting from my desk, for you to know what I do, EcoBank has created a desk specifically to support women-owned, women-focused businesses. And so we are targeting 4 categories or areas. Any business that is owned by a woman, or even with 51% majority being a woman. Any business that is being managed by a woman. The third category, any business with 30% or more as female employees, or even 20% in shareholding being women. And then the last one, companies producing or manufacturing for women. We are saying that we are targeting and partnering with any of these 4 categories I have mentioned to give financial and non-financial support. So for financial, be it you want asset financing, you want to buy more stocks, you have a contract, you want us to help you execute the contract, or probably you finished even executing the contract, you want us to help you pay or finance under the LPOs that you have generated, waiting to be paid. We can do that under our receivable financing support. We have even systems where if you are even using any of our digital products, we are able to give you financial support to help you grow your business without any form of collateral, which we see as one of the challenges being faced by SMEs and women-owned, women-focused businesses in that regard. So this is what we are coming up with. And for the financial bit, we also have the non-financial support, which I talked about, awareness creation, capacity building, for people to really move our mindsets to say that we can scale up. We need to embrace the right technologies. We need to even embrace the digital technologies that have come up, so that our businesses are visible. We have network platforms where we can onboard you onto our Google My Business and Digistore platforms to help you advertise even what you are doing at no cost to you, the SME. And so these, among many others, are what we have a desk specifically for agribusiness. We have value chain businesses so that we mine all the chains under any business that we finance, so that it's not just the bigger quotes or the bigger companies, but we mine the chain along to the distributor, to even the agro processor along the chain. So we are intentional about growth. We want to scale up. We want businesses to thrive, especially now.
Sheila, when people see We Saw It, they think, you are doing very well. This is a business with no problems. When I talk to Mirabel about our business, you people, you are trying, or you are forcing. Charlie, you are doing well, congrats. But we have problems, right?
Plenty.
What must change for us? What do you expect? What do you expect the ecosystem do for us immediately and in the medium to long term for us to rub shoulders with the Olams and the world? Because I see you being like a Wilma.
Yes.
Or an Olam.
We are getting there.
Yes.
Yes. Yeah, so what I would say is that the intentionality of helping finance businesses, and most SMEs that we see around, most of them are in need of just working capital. If you take 0 to 3 year businesses, they are looking for 50,000 to 500,000 USD. These are the working capitals they are looking for. And so if there will be that, we have the ecosystem being intentional to help businesses, to help finance businesses scale up. I think it will help. And then, as she said they have training, capacity building for SMEs. Yes, I see that when I started searching for funding, I've been in deal rooms, and several deal rooms, and I wasn't successful. And anytime I come, I'm like, what language is the investor looking? What are they seeking to hear? And so we want that training, capacity building training. What is it that the investor is looking to see? What is it that they want to hear? They want to see us do, so that we will be investor ready to help us scale up, give us that money to scale up our business. So the purpose, being purposeful to help grow businesses, putting a product that will appeal to us, so that when we knock at their doors, they'll say, yes, we have this for you. You can have it. Yes. Thank you.
Thank you. So I'll go around and take final thoughts from the panel, starting with you, Samuel, then I'll end with Hamdia.
Well, what I'll say is, for us, the time is actually ripe for us to access catalytic capital, whether it's in the blended form, because if we do not, at this point, stabilize our businesses, when, as you said, the city is very erratic now, right? If we don't stabilize our business right now, we're going to create problems for productivity-wise, for employment. And so it's time that we really look at how do we mobilize I'll first of all talk about relevant catalytic capital for the various spectrum of needs that we have. Sheila talked about needing capital and going to a number of deal rooms and not being successful, right? How do we ensure that we are matching her to the right form of capital that she needs at this stage in her business, and how are we ensuring that the full spectrum of capital providers that serve the different segments of the market are also provided with the needed catalytic support at this time, so that they can also support businesses in this very critical time.
Thank you. Loretta.
The best form of empowerment is economic power. And so I will say that we must let SMEs and all of us seated here today, including AMES reports, we must make it available and out there for people to know that these funds are available, these support exists, so that it does not really end here, but it's available and accessible to the general economy. I will encourage my SMEs, including Sheila, which I'm pulling on board from today, to also approach us. It's a collaborative effort. So once we work together, once we have the right framework to say that I want to scale up, this is what I'm doing, and 5 years from today, this is what, and I'm happy you are saying that you are the next Olams and the Unilevers that we want to see. So we are intentional. We know where we want to go, and then we walk the journey together. Together we can. Thank you.
Together we can. Sheila? And then Hamdia.
Yeah, so I'll say that we are also here to grow the business, and in the ecosystem, we want to see our investors helping us, holding our hands to do this together, to grow Ghana and make Ghana a better place for us all. Thank you.
Thank you, Hamdia.
Yes, thank you. What I want to say is that, yes, as an investor, we have to be very intentional about what we want to see. So the impact you want to see tomorrow, you have to be intentional about it today whilst you are deploying the capital. We need a lot of catalytic capital to be able to blend the situation in which we find ourselves. We don't want the dust to settle, and it settles down with all our SMEs. Wash them away. So this is the time. We need to do it now, and I think it starts now. We don't have time. Thank you.
Thank you. And for me, please hold the applause. I'll call for it. I was at the Young Economic Forum on Monday to present on agribusiness. And for me, I think that most of these SMEs are in the agribusiness space and manufacturing space. And if you look at agribusiness and light manufacturing, we import close to $8 billion worth of things in this particular space. Now, with all that is happening around the world, the importers are struggling. I'll use rice as an example. Somebody who wouldn't buy our rice for 40 Ghana cedis last year is begging us to sell it to him for 65 for him to rip back to sell for 75. They cannot import. This, we are in crisis, but this is also a very good opportunity for us to look at supporting SMEs to produce, to bridge the gap. In fact, this is actually the moment our SMEs must take off and to win us off all these imports. $8 billion worth of imports, let's target 10% of that within the next 1 year to enable SMEs produce this, and we are creating wealth, and you'll all be happy. So now please put your hands together for my panelists as they take their seats. Thank you very much. And we will now invite Dr. Gordon Adomza from Ashesi University. He's a research team member to take us through the impact investing map. Doc.
Thank you, Kojo. Okay, so Ahmad walked us through the methodology for the research, and the Catalytic Research Project is not the only one Impact Investing Ghana is working on. There's also a broader impact investing research project. So together, the goal was to develop a map that allows people to interact with the data, people who wonder what catalytic investment is, who is involved in these types of investments, who are the typical beneficiaries, at what stage of the life cycle of the business are these beneficiaries receiving catalytic investment. So we are in the process of building this map. So we had a debate about whether we should finish building it before we show it, but at Ashesi we pride ourselves in experimentation, so we thought we will show snippets of it, because we need to know how people would use it, right? How would our uncles like Kojo use it, and our grandparents and so forth be able to use it? So when it comes, when we launch it, it's going to have two sort of areas, if you will. Maybe we'll go to the catalytic map. The concept is faceted search. So you search, you filter, and then things move around. So we have the map system here. Don't worry about the dot in Ivory Coast. It's still in development. But you can see that on the left here, we have a number of organizations that are listed. And if you click on filter, you go to, let's say, filter by financial instrument. You choose debt, equity, and you apply filter. The organizations are supposed to change in an ideal world. You can filter by sector as well, so you can sort of choose the different sectors. These sectors are represented by drawn from the different catalytic financing programs that we saw. So you could filter by this and say, well, maybe I invest in education, or I invest in health, and I want to see who else is doing investments in the space. And so you can filter by that and get the number of organizations, and you can also see where they are on the map here. In other versions, we have different graphics, not necessarily a geographic map, because there are so many different representations you can have for different kinds of data. And I think that one of that is you can see on the impact investing map itself, where if you hover over the life cycle graphic here, you can get a sense of the number of organizations that are represented in that life cycle that are invested in. And you can also search. There are other filters that we took off for this demonstration, but our hope is that we can make this map very interactive to allow for researchers, for investors, for anybody who's trying to understand the space, make decisions, to be able to interact with it and make better decisions. So it would be good to get your feedback if maybe something jumps out at you. But we also have, if you go on there, I think we are collecting email addresses. I'm guessing it's on there somewhere on the homepage, so that you'll be the first to know when it's launched. So yeah, any general feedback? And yes, Amma.
Just to add, it's Ghana Investing Map.
Right, it's GhanaInvestingMap.com, and it's live now, right? Yeah, you can put your email address there. It's a little way of testing as well. So even if you're like, oh, I'll wait, you can still put your email address there so that you help us test the functionality and also what the content. So thank you very much, and I'll hand it over to Kojo.
It is not easy. But Vim. Fellow Ghanaians. Somebody says now we are the real Nyamebeche Republic. Eesh. Hamdia will give us the closing remarks. Please, let's welcome Hamdia.
Thank you, Kojo, and a very good afternoon to you. It's afternoon now, and all protocol observed. Thank you for making time to come. I'm supposed to give a closing remarks, and I think that find the report, read it, look at the recommendations, look in it and see the people that you can collaborate with. Because I think all of this is about collaboration, and we need to collaborate. Please remember that we are in an agency situation. And always remember Dr. Ken when he said, the fierce agency of now. Thank you.
Thank you very much, Amdia. You're a very bold woman. Please put your hands together for her once again. We are going to have the appreciation, vote of thanks and everything, but the person who is going to do this, I want us to appreciate her before she comes. Because working with her and everything shows that she's committed to this. She doesn't sleep, emails every 2 seconds. If the CD appreciated just like her emails, by now the CD will be $1 to the dollar. So please help me appreciate Mary Afeni Abeka as she comes to appreciate us.
Thank you, Kojo, and a big thank you to everyone for making the time to be here. We know that it's a busy time for all of us, and a huge thank you to the ecosystem for your commitment to engage and drive action to increase the deployment of catalytic capital and also impact investing in general in Ghana for SMEs. And with that said, I want to say that we have the deal source africa.org platform where we do deal rooms. We connect impact funds with impact ventures. And so if you have a business, kindly sign on to the Deal Source Africa and we'll connect you to an investor. A special appreciation to the Research Steering Committee for their guidance provided. Nana Osei Bonsu, the CEO of PEF, Madam Hamdia Ismaila, the Managing Director for VCTF, and Prof. Angela Owusu Ansa, Provost of Ashesi University. Also to the research stakeholder group that participated in the interviews, validation workshop. We have the Chamber of Corporate Trustees, Ghana Security Industry, Ghana Bankers Association, Resource for Development, Palladium Group, among others. Also acknowledge the contribution and input from Mr. Zebero Salifu and Emmanuel Enyam and Joseph Otu for providing an industry perspective and taking a look at the report. And again, we want to acknowledge the tireless efforts of the research team for making this
report coming to life and the map. Dr. Charles Adongo, Dr. Gordon Adumza, we have Dr. Senna also in the room, if you can wave. Sterling, Imelda, William, and of course, Amalate, our CEO, for all her, amazing, she's just amazing, I just want to say that. And the report is available at impactinvesting.org. The map is also GhanaInvestingMap.com. Be the first to be notified when the map goes live, so kindly put in your email and then we'll notify you when the map goes live. We'll also share the report with you if you've registered for this program or if you attended. We'll share the report via email as well with you. Thank you so much. We have lunch on my right and networking. Enjoy your day. Bye.
The report, for me, it's very timely. We need to be able to understand the level of capital and the different kinds of capital that comes into Ghana to support SMEs. We've been talking about SME finance and the gaps for a long time. And we all know that access to finance for SMEs are different. There are very different categories of SMEs. And then so in supporting them, we need different kinds and different types of financing. And for a long time, we talk about it, we look at banks, but we don't look at the other alternative way of really solving SME finance and gap issues. So this report is timely. It's really a report that we should all get copies, read, and reflect on some of the key recommendations. That will be very helpful moving forward in supporting SMEs in Ghana. So what is going to happen with the report is that you begin to see those who are the catalytic investors, right? The report is very clear in definition in terms of what catalytic kind of financing is and who provides them. And so now we need to look at those who are providing them, see how we can get them to scale the money they bring in, and get new people who want to design new catalytic form of, products to reach those people and get more of such to design various products for SMEs. And so what is going to happen is that you're going to have people beginning to approach, like intermediary organizations, beginning to approach some of these catalytic investors with different kinds of products that may interest them. For now, what we have seen in the market is that some of the intermediary financial institutions will design the products with the support of these catalytic investors, which a lot of people don't know. So now that the report is out and we know who are providing such support, you just target them and begin to design products that interest them to bring in the catalytic layer. And as I said on the panel, we need to begin to look at how we blend the financing, right? So if we get more catalytic investors coming with different kinds of vehicles to get them to bring in a layer to blend, we'll be able to pull more money for impact. Because catalytic investing generally would have a certain intentionality with it. So some would say we want to create more jobs, and so we are coming in with concessionary to be able to blend to make sure that we reach more businesses that will create more jobs. Some would be looking at supporting green enterprises, and they would say we want to bring in a certain kind of layer of funding to support us, to support companies that operate in the green space, right? So those are the kinds of things that we have to begin to narrow on to be able to pull more of such investors into the country. So this report is it's really giving us direction of how catalytic capital has been used. And so it helps us to design going forward how we can blend most of this catalytic kind of capital to get the maximum impact of it. And it also now gives us room to be able to get SMEs to be prepared for such products, right? To know where they are, where to find them, and also how to get it. So we prepared both SMEs, and so it's a report that is timely, that all the players within the ecosystem can use and collaborate, because the key word is how to collaborate. Some of the SMEs don't even know some of these products at all. During the research, as a steering committee member, we realized that there were certain kinds of products that we didn't even know. So this report has brought to the fore what actually has been going on, so that at least it can send that information out there for everybody to know, and then people to begin to see how to assess it.
My name is Isaac Asmani. I'm the investment manager at Wangara Green Ventures. I think we should start off by commending Impact Investing Ghana for putting together such an insightful report. I mean, there are two key takeaways specifically on what we can do to ensure that we help the ecosystem and to provide more catalytic capital. So on the part of government, there has to be policies that spur growth, policies that promote growth of Ghanaian MSMEs, and policies that create that kind of enabling environment to ensure that MSMEs will thrive. And then on the part of ecosystem players, we also need to develop the capacity of MSMEs and to orient them and to train them so that they are able to attract the right kind of investors and the right kind of patient catalytic capital that can help them grow. Because Ghana is the only country we have, and I think we all need to work together and to ensure that Ghana grows. Thank you.
My name is Nana Osei-Bonsu. I'm the Chief Executive Officer of the Private Enterprise Federation. I've had a preview of the report and I kind of like it. I have some issues so far as some of the nomenclature, and especially even my federation is not mentioned in the abbreviations. But in totality, this is what we need at this juncture, because I take the situation in Ghana as a restarting of the economy. So the kind of tenets and parameters and the areas that we need to address are all captured in that report. Sometimes these reports are valuable, but not many people get to know. The SME sector constitutes about 80% of our economy. Unfortunately, they don't have access to some of these reports. The tenets of this report, to me, are the cornerstones of building or rebuilding the SME sector in Ghana. So that definitely will influence the mobilization of capital, the solicitation of capital, and the delivery of the capital for the SME sector. There must be a conscious effort to engage capital mobilization players, to engage the financial institutions, to engage the SME sector, who are the beneficiaries, who can or who may be the beneficiaries of the intended capital mobilization. So if we disseminate it to them and engage them in the discussions, I think that give me 2 years, we'll be doing wonderful in the country.
Could you share your reflections on that?
Yes, this report is very interesting. In fact, I was not aware of catalytic funding until today, and the findings are also interesting. And one thing I have picked from it is the strategy that is used in catalytic funding, and which is capital blending, in fact, blending of capital. And that is one important strategy that I picked. That is a takeaway for me from the report. As stated in the report, the financing gap in the MSME ecosystem in Ghana is around 4 billion, as reported by IFC in 2022. In fact, in my view, it is unavailability of capital in the system. Because government itself doesn't have enough to support MSMEs. And then also the little that is in the system with the financial institutions are given to the big players in the ecosystem. So the MSMEs do not have enough to access from the banks and then other funding institutions in the system. Then I also believe, in my view, that government also is a big borrower of funds from these banks. So there is little left for MSMEs to access. One main recommendation that I will also agree with is the blended funding, which I think will be attractive, or will be attractive to the MSMEs. And in fact, the situation that we find ourselves in, if you don't come out with an attractive funding product for MSMEs, they may not be willing to avail themselves of it. So the blended capital funding is what I think will be the right product for MSMEs. Access to capital alone will not be enough for MSMEs. In fact, it must go with capacity building, so you don't lose the capital. So the MSME will be able to, repay whatever they take from the financial institutions. And then one other thing that we must also consider is how to get the information to the target MSMEs. In most cases, when institutions come out with funding products, they are not able to get this information to the target, the MSMEs. So it will be necessary to work or collaborate with institutions that can, push this information or get the information down to these MSMEs. In fact, I will recommend Ghana Enterprises Agency, because we are found almost everywhere in the country. We are in about 210 districts currently in the country. And if institutions come up with projects like this, I will urge them to collaborate with us so we can also, get this information or educate the MSMEs on whatever product that they come out with. Get the information to MSMEs on the ground.
My name is Zubairu Salifu. I work for AV Ventures LLC. I'm the Senior Investment Manager responsible for Ghana. At AV Ventures, we provide catalytic funding, mainly debt, to agri-SMEs in Ghana. I think this is a good report, hopefully to bring insight to the sector. I think there's a lot of work happening around catalytic investing that is not highlighted, and I think this is the first time we're going to, have the Ghana or developing Africa perspective to the whole catalytic capital. Hopefully to bring some nuances to the Ghanaian situation, to the international community. I think we need catalytic capital in this space to unlock a lot of investment from third-party investors to Ghana. So yeah, I think I'm hopeful that this would be a groundbreaker for catalytic investing in Ghana. Financing gap is caused by many factors. One are factors that you would relate to the SMEs. There are other factors too that are macroeconomic. There are also factors that relate to the investor. So I would say from my experience as an investor, I think the biggest challenge to unlocking finance for SMEs is the structures and investment readiness of these SMEs. A lot of them are not willing to be governed properly. A lot of them still want to run it as the property of the owner and are not willing to be transparent and open. And when you have that situation, it's naturally difficult. So I think it's more around investment readiness and just the high risk and return profile of some of these SMEs. I think one way we can deal with the problem is to try and, get a lot of ecosystem actors to be actively involved in getting some of these SMEs ready for investment. We need to do a lot of, ecosystem building. We need to educate, and we need to let a lot of Ghanaians, and especially SME owners, know what comes with opening yourself for third-party capital, which I believe is missing. And also, it's also down to the cost of it. If the macroeconomic environment, especially, is not favorable for funding that is denominated in foreign currency, SMEs really can't afford that type of capital. So as an investor, you are better off keeping the money rather than take it out there, which could actually contribute to the company actually going down, or you, the investor, kind of suffering. So I think it has to be a concerted effort from all ecosystem builders to change the face of SME investing in Ghana. From the highlights of the report, I think bringing the Ghanaian situation and perspective to bear would be groundbreaking, interesting findings. Particularly what stuck with me was the fact that, a lot of these interventions at improving access to capital, a lot of it is borne locally by investment fund managers, but hopefully it would bring a lot of support from the development finance institutions and philanthropic and foundations that can bring in capital to buy down some of the risk and be able to catalyze fund managers that are providing first loss or other forms of catalytic capital. So I think for me, what would change is basically just elevating the need for catalytic capital from a Ghanaian perspective, and hopefully that would get a lot of these DFIs and bigger pocketed investors to begin to look at us and look at what we would actually need for a market like Ghana, which may be different from what exists elsewhere. So, yeah.